Yesterday we had CPI, so we had a bit of a movement and a lot of manipulation also that took place. You can see this is an example of a trade that was taken yesterday. I didn't take it on a live account because I wasn't feeling as confident as normal because price was really stagnant and wasn't really moving the way that I wanted to see. It started moving after 10 p.m. and normally I try to take my entries between 8:15 New York time and 9:12 New York time. And price started moving after 10 p.m. So it was a really like London close entry type thing. I'm gonna take off this indicator. This is doing too much on the charts. So we had this wick. I was looking for an entry in this wick above the 50% because that's fair value for selling. But price ended up taking liquidity and breaking market structure down to the downside, validating this order block. So once price validates this order block, it also created an FEG. So this is one of my entry models and also one of the strongest one because you have an order block paired with an FEG. And you can see how price reacted to the order block and the FEG and just started dying. And this was my target for liquidity. And excuse me. Yeah, this was my target for liquidity. Here I would have taken 30% off and also put my stop loss to break even. And then this projection aligned with the other levels that were available for liquidity and also this order block right here. So this is why this was my last level of for profits. And this would have given a 1 to 8, which was really nice. But we don't have to take every trade. We can use these for journaling and also learning. You know, one of the things that trading teaches you is to sit on your hands. If you're not confident with your setup, don't just take it to take a trade, you know, because that's something that happens a lot is we feel like if we're not doing anything in the markets, like, you know, we're not being productive. But being productive has nothing to do with, you know, taking trades, because you could be taking a lot of trades that don't even make sense. You're just taking them to feel as if you're doing something, you know, to get the dopamine hit. But sitting on your hands is one of the most important aspects of trading, and it's for capital preservation. So moving on to today, that's just a recap of yesterday.
Real quick, Don Niemand, you had a question or you're raising your hand. I just allowed you to speak, so if there's any question, just ask.
Hello, brother.
Yo, what's up?
Hello there.
Hello, guys. How are you doing? Yeah,
I'm doing great.
So
How are you doing?
my question was, yeah, I'm great. Mir geht es super. AJ, I had a question. Can you please tell me another time your strategy, your setup for this trade? Just explain it another time.
Okay. Do you want me to explain now, or do you want?
Thanks.
All right.
It doesn't matter.
So,
I'm in the live. Yeah, that's cool. If you want, you can do it at the end of the live.
you mean this setup or just my trading model in general?
Yeah. The trading model that you have used for this trade.
Well, the trading model that I use for this trade is basically, you can see here, ICT talks about a pattern called the three little Indians, which price takes liquidity three times, right?
Yeah.
So for me, price took, wait, that's not good. Price started taking liquidity here. This was the first time price took liquidity right here. So this is one. This is the second time price took liquidity. And then you have a third time, which was the CPI wick that price took liquidity again. So these are three times that price took liquidity.
You can also factor in intermarket analysis, because like AJ said, this was taking liquidity 3 times. And then if you look at gold at the same time at CPI, gold is trading above the equal highs into a fair value gap.
Correct.
So you have like intermarket analysis. We are looking over each pair, and then we choose which is the most likely to move and what every pair is doing, and based on that, you can make a decision.
And Mika, I think Mika also shared his gold analysis yesterday in the group.
Yeah, correct. I shared the gold analysis in the group.
So yeah, after we had price taking liquidity 3 times, you just wait for confirmation because we still don't know if the markets are going to turn. So right now you have price taking liquidity 3 times, and then you have price creating a order block at a point where we can expect an order block to be created because price just took liquidity, and this order block was validated by this down candle. This down candle right here, because this down candle validated the order block, but it also validated a shift in market structure. So once we have order block validation and also a shift in market structure, we can start expecting retracements within the range that was created. So I was just using the range of the wick because anything above 50% of this wick is a fair value for sell. So you can see how price came back above the 50% of this wick and started touching this, mitigating the order block. Yes, exactly. Yeah. So this was my confirmation for entry. And if you're still not confident enough to enter on the first touch of the order block, you can wait for price to for the reaction of price.
BOS, yeah.
Yes, exactly. So there was another breaking market structure, and there was another order block also created. So this could have also been an entry with your stop loss above the order block, because you already have 2 confirmations of price going down, and you have the sell side liquidity here, which is like a magnet, because price already took all the liquidity above here. So there's nothing more for price to do up here.
Exactly.
And
beautiful, man. Thanks, AJ.
Yeah. So that's basically the model. And one thing I can tell you is that once you find your model, just try to find as many setups, like when you're back testing or everything, where you see this model working out, like A+ setups. And this will bring you the confidence that once you see these patterns happening in price or these characteristics happening in price, you just manage risk and press the buttons, because the confidence comes from knowing that this model is most likely to work out. So it's not going to work out every time, because of course, as humans, we make errors, and you know, it's you can't win every trade. But this is why we manage risk, and we know that if we have like a 70% win rate, that at least 7 out of 10 times that we are going to win. So you just trust the model, and you manage your risk, and you pay yourself as price goes your way.
Exactly.
So yeah, that's that.
Thank you, man. Beautiful.
No problem. So going back, we're going to look at, I'm not sure if you guys see, yeah, you guys can see that. All right, we're going to see the news. That's one of the first things I do every day, is check the news, because you need to know when the injection of volatility is going to be. So right now we have at 8:30 we have medium impact news. So I don't expect this to be like a really big range day, since yesterday was already a big range day. So today might be an inside day on the daily chart. So we can expect some measure of volatility, but not as much as yesterday. You can see how much price moved since yesterday. Just going to mark this out. So we're trading below the daily open. I'm going to put back the indicator. We're trading below the daily open. And one thing I like to wait for is also the 8:15 open. These are sensitive. Times in price, and it also gives you an indication of what price can do next. So what I can see from immediately, from right off the bat, is that price has continuously taken sell-side liquidity, leaving all this buy-side liquidity open for it to be taken. And since price has been dropping since yesterday, we can expect a measure of retracement up until, for example, this fair value gap that hasn't been filled completely. Just drawing real quick. X. Yeah. And this is one of the continuation models that I love. Why? Because it tricks people into thinking that price might continue go higher, but what really price is doing on a higher time frame is just retracing to a level of premium, and then for it to sell off. Because if we're taking this range into consideration, this is right around above the 50% level, but also OTE. So we might see a couple wicks in here or even up here. I'm trying to find the, wait. I had my favorite tool somewhere, but I don't know where it went. I think I got rid of it. Yeah, this one. This is the one I needed. Wait, let me make it better. So yeah, this would be also a model that I like trading because they're pairing buy-side liquidity with shorts. So people are buying at a premium and they are selling at a premium. So once price breaks down, this is giving us the indication that we have probably an OB validation and also a shift in market structure, because price broke market structure to the downside. And then where's the liquidity going to be laying at? Because everybody that bought, where are they going to put their stop losses? Right here. So it's going to take that and then continue down. And this is something I like to trade because it's a market maker sell model on a lower time frame. And it's one of the most powerful patterns that you can trade. So this is the analysis that I got for now for Audi USD. And I like waiting after the news to trade. Why? Because trading the news, it's really exciting and all those things, you know, you see wicks and price moving in all different ways. But if we're looking at it from a professional standpoint, you're just gambling if you're trading news, because nobody knows which side it's going to wick or how much, or if spreads are going to open up. So you're really putting yourself at risk. Instead of managing risk and minimizing your risk, you're making it bigger, or the biggest risk that you can take. So what we prefer to do is wait for the news to happen, for the market makers to show us their hands as to what they want to do, and then we can react off of what price is showing us. And that's the most important thing, is that we react to what price is showing us. We don't just guess where price is going to go. And if price gives me this signature that it comes to the FEG, reacts, and breaks market structure to the downside, which is right here, this is a trade I would take without hesitation at all. I would take this trade right here, all the way to the downside. Mika, do you want to fill in on this?
Yeah, I'm with you. I'm with you on that. Like 100%. I have almost the exact same analysis on EU. So if you're going to EU, I can talk about the EU a little bit. So EU is basically the same. We had a huge day yesterday. So if you look back on the 1 hour, for example, yesterday's range, you can see a big fair value gap above. So I would target this as the trough for today. And then above the high. So we have a high and the fair value gap. And then, as you can see, we have this little range created in London, which we are currently trading above 50%, I think. I'm not sure. I haven't measured it, but I want to see a deeper retracement in the perfect world. Yeah, just mark up a little bit first. Not that I'm going ahead. And then, dropping to the 5-minute, I can see a fair value gap in discount with the huge wick, the huge wick. I disregard it. To the left, AJ, and then no, down.
This one?
Bullish fair value gap. Right when we move up here, like the.
Do you mind sharing screen, Mika? It's kind of difficult if we do it like this.
Wait. I'm gonna share it.
It's kind of difficult because I can't see what you see. I try to.
Yeah, I'm trying to share it. This is the correct. Yeah, this is the correct one. You can see my screen, right? Okay.
Yes.
So going over it again, here's the imbalance that I'd be looking at. So this is the target for the day. Again, inside range day.
And it's also a BPR, by the way, guys. It's a balanced price range because you have two FEGs crossing each other. And what makes it even better is that price took liquidity to the upside. So chances that price goes up are really, really slim.
Yeah. If they are really bullish, they will break through this. So this will be a really bullish sign. But other than that, this should hold a good bit. And then, for me personally, if I throw my indicator on, I use this one. This is New York. Maybe you've seen it already in another call. This is New York. So this is 50% of New York. I'm interested in buying below 50%, below the opening price.
London.
London. This is London. Sorry. This is London range. And then the green one that's coming up is New York. But discount of London is where I'm interested. And then we have that fair value gap. This is what I've seen. Because I disregard this huge wick, as wicks are just imbalances itself, and this is just a huge wick. So I disregard this whole candle, and then this is the fair value gap I'm looking at. And I'm looking at the reclaimed order block over here, and that order block somewhere in here. If there's something that presents itself, I will take this. And if we throw on the other indicator that HA uses, this is in the time window of liquidity hunt. So down here is where I'm interested, and this is looking like the same as AU. Basically, AU is a buy for me. EU is a buy, and I will let you share your screen because I'm really slow on TradingView.
Don't worry about it.
Gonna stop share.
Share screen.
And also, if you guys have any questions, I see the icons on the right side of the screen when you want to talk. So I will give you privileges to talk, and you can ask questions whenever you want. Just press on. I don't know what's it called. I think it's allowed to speak or something, and I will allow you to speak.
Also, one of the characteristics that we can see here in price is that basically we have an accumulation happening at a time that we would like to see an accumulation happening. This is the accumulation, also consolidation. And as Mika pointed out, we have a couple PD arrays that price could respect. It's gonna.
Yeah, and adding to this, it doesn't matter what PD array it respects. Like, of course, now the question is, yeah, what PD array does it respect? I don't care because I can see what it respects. For example, I'm looking at the shift or a break in market structure and I just react off of what the market's giving me. I don't try to like forecast what it's doing because nobody knows for sure. We just have our point of interest, and if we have something that we can trade off of that, we will. If not, we just stay sidelines and sit on our hands.
Yeah, exactly. And that's exactly what we do. We don't try to force a trade idea. It's more like you try to find a POI that you're comfortable with, that makes sense in your head. And once price gets to that POI, then you start looking for reactions. And if these reactions give you like confirmation, then you can start looking for entries. So it's always the context. So here the context would be we're in accumulation phase. Then there could likely be a manipulation. And once we break market structure and have OB validation, then we have the confirmation. And then we can start looking for entries. So it's really a process-oriented way of thinking. So instead of thinking emotionally and, like forcing a trade idea of like, yeah, price should go up or down, we just wait, because patience is the greatest virtue that you can have in trading.
Yeah, and just because you're a day trader doesn't mean you don't need patience. You always need some sort of patience. I think maybe you even need more patience when being a day trader than being a swing trader, because if you're a swing trader, you could just set your I think it's alerts that you can set in TradingView, right? So just set your alert, and if price hits it, you have like, I don't know, an hour to enter. But if you are a day trader, it's really hard to be patient, because it can be that you sit like 2 hours in front of the screen just watching price and it's not giving you anything. And I think this is way harder than just having a limit, or not a limit, an alert, and going to the charts when the alert is triggered.
Yeah, and when you start looking at the charts for too long, you start looking for unicorns and stuff, and they start appearing on the charts.
Yeah, like you will find a trade, but it will most definitely be the wrong trade if you look too long. But yeah, I'm most certain that this will be an insight day. So yeah, just like AJ just marked up, AMD is likely to unfold inside the range of yesterday, aiming for that liquidity pool and for value gap. Right now, price is really slow and stagnant. We already had the news, right? Or am I mistaken?
4 minutes.
Oh yeah, from it's okay. It was 8:30. I thought it's 8:15. Okay, so we'll see what the news do, and then yeah.
Is there any other period that you guys would like us to analyze, or do you guys have any questions that you guys would like to be answered? Eric?
Yeah, Eric wants to speak. I'm gonna allow him. Yeah, you're ready.
Hi, good morning. How you doing?
Hey Eric, good morning.
Is it okay if you check out USD Canadian dollar?
Yes, of course, no problem. That's one of my favorite pairs. It's one of my favorite pairs to trade. So looking at USD Canadian dollar, let me just take this off. Looking at USD Canadian dollar, we can see that price went up to this FEG, which is also a BPR, because there are two FEGs. There's one FEG going up and one big FEG going down. So this is a balanced price range. You can also see how price has been stagnant and consolidating in this balanced price range. And that's exactly what we want to see in a BPR. So once we have our higher time frame framework, which is this this dealing range from this high to this low, price is trading above the 50%. So we already have our context. Price is in premium. It's at a BPR. And yesterday we had a big range day. So today we can expect a retracement. Now, if we go back down to the 5 minutes, this was where the daily open was. I'm gonna put my indicator back on to have a little bit more of clarity for price. Yeah, so price to open up, and we're above daily open, so that's also another indication. We have the 4 a.m. opening price, which is also a sensitive time. You can see that price hit it to the pip, and we have a high resistance liquidity run to the upside. Why? Because price took this liquidity and it hit a BPR and started trading down. So we have our confirmation in the sense that price created this order block. These two up candles together become one order block. So this would be the order block right here. Yes, so this would be the order block right there. And price validated this order block by breaking structure down and also confirming a shift in market structure. So once the shift in market structure is confirmed, we can see that price created or engineered liquidity and discount of the range right there by creating an intermediate term high and then taking out the liquidity. So this would take out the early sellers that were in trying to sell early.
News hit, by the way, as you can see.
News just came out.
Now we can see if EU trades down to what we wanted to see. But I don't think it will get this low, honestly, but we'll see.
The best thing would be if it takes out this low. Even if it only takes out this low, that would be good enough, because that's the sell side liquidity that they would be pairing the buys with. People selling in premium, and they are people selling in discount.
I like the low to the left as well, because it's it's around 50% of London, and this is also great. But we'll see. Yeah, we can continue on USD CAD. I will tell you guys if there's anything on EU that's worth looking at.
You can see that Audi USD just went to this order block and also 8:15 time, which was sensitive. We'll see what the reaction, how it's going to play out.
Yeah, EU is approaching our entry. Well, not entry, our point of interest.
And we always wait for the reaction. So once you have your point of interest, you wait for the reaction, because you don't know. Like right now, you wouldn't just buy right here because there's no confirmation that price is reacting off of it. You don't have a breaking market structure. You don't have a market structure shift. So entering will be just gambling, because you're just guessing at this point. Price hasn't given you confirmation yet.
Yeah, so always wait for confirmation. I don't know. Have you finished analyzing USD CAD? I'm not sure if you were finished, but
yeah. So analyzing USD CAD still. Like I was explaining before, price created an intermediate term high in price, and then it took it out right there. Right there, price took it out, and here we can see how price is wicking within the order block, but also in the BPR, but it's not closing above 50% of the range. So this is still a valid trade, but we have to wait for for confirmation, because price is just wicking within the order block, but it hasn't given us a sense of like a break of structure or a market structure shift with this. Just gonna take this BPR off. We all know that the BPR is right there. This is also fair value for selling.
And if you're new to trading, this is probably the reason that kills your profit. Just entering without confirmation. Because a lot of the time I was right about the direction, but wrong about the trade when I started trading. And this is exactly why. It's just entering off of what you think is going to happen instead of reacting off of what's happening. So yeah, this is a huge step in development if you understand this.
Correct. So we can see that the manipulation came down to the area that we wanted to see it manipulate to. I think this was perfect order pairing right here. This is perfect order pairing. Do you see it, Mika?
Yes.
Right there.
Yeah.
This was perfect order. This is perfect order pairing in the sense that here we have sells, like the people that are hedging the markets, the big players, they have sells right there. So once price goes in above it, they are at a loss. And then they come back down, they manipulate price to where there was the last point of selling to pair orders. They pair the sell orders right here with buy orders. And now we should see price start going back up if we are on the right side of the market. What is USD CAD doing? We can see that USD CAD went to the fair value gap, which was fair value for the market makers to sell. It also took another point of liquidity right there. So here we have the three little Indians again. So it's a reoccurring theme in price that we see right there. It took liquidity twice, and then another time above here, just right there. Took liquidity once more. I'm gonna take off my indicator so it's clearer. Right there. So after I took liquidity 3 times, you can see it touched the FVG, and there was also this order block right here, and price is just dying.
Yeah, so EU, for example, gave a shift now on the 1 minute, and then you have the order block on the 1 minute. So this is something I'd be looking at.
I'm gonna take this off. So on the 1 minute for confirmation, what we would have seen as a trade is once price created this order block right here,
yeah, so
once price created this order block, we can start expecting retracements either into this FEG down here, right there. I'm gonna take this off. Into this FEG right here, and you can start measuring the range that was just created. So you want to be buying below the 50% level. So this would be a valid order block because it just took liquidity and we had a market structure shift and also a validation of it. And you can see how it's reacting within this FEG right here. So if I were to take a trade, this would be a valid trade for me. With my stop loss below that low and with my target at the BPR. This is something that I would like to see.
Yeah, correct.
But of course, here we also have a BPR, so price doesn't have to come all the way down here because there's a BPR right here at this entry. If you look at USD CAD.
So what's happening if it doesn't come down there? You're missing it, and this is totally normal. You will miss trades, but it doesn't matter. At the end of the day, we're still profitable, still making our money, and taking a piece of the cake, and that's what matters.
Yeah, it's not always about being like right in the markets. It's a learning curve, you know, like every trade that you see, you learn from it, and it's how do you say? Yeah, it's a learning phase for everybody. Like you never stop learning how to trade and how to become a better trader. Like you will always be a student, because once you think you have mastered the markets will teach you that it's you haven't.
Yeah, it's also pretty hard to master the markets, honestly.
Yeah, it is.
Like ICT is the closest you can get, I think, and really being an ICT trader you can be an ICT trader and just get your, like, I don't know, 2 to 3% a week, or you can be an ICT trader making 20% a week. It's all possible, but the difference between a 2 to 3% trader and a 20% trader a month is huge. Like the rabbit hole is really, really deep. So yeah,
I think when you practice your model, and it comes down to finding your model. So once you find your model and you have data backing up that your model is profitable and all these things, you become more confident in putting on trades. So if you were just starting out trading your model and you're not that confident, you're not going to be risking a high amount. So you would be risking like 0.5%, or like up to 1%. But really confident people can risk up to 4% on their model because they're that confident that it will play out, and they have the buffer to back it up because they already are in profits. So if you're risking 4% on a trade because it's the highest probability trade there can be, and you get like a 1 to 4 RR, that's already 16% in only one trade. Now imagine if you have like a 1 to 5 or 1 to 6, that's when the percentages start going up. So when you see people like flipping accounts and all these things, like, yes, it looks really amazing to the eyes because you're like, oh, how they're doing it. But it's really like they practice this thing over and over and over and over again. It's like that saying that they say, you shouldn't fear the man that practiced 1,000 kicks one time. You should fear the man that practiced one kick 1,000 times. So it's the same thing with your model. Don't go like
quick update on EU though, before it's moving to the entry. I had a buy limit there, but I deleted it just now because if you're looking at AU and USD CAD, you can see that EU is just not moving. So everything else was like the better trade for me personally right now on the 1 minute. You can see that USD CAD and AU and everything else was moving way better. But then again, this is still valid. I'm just not feeling it right now.
Yeah, it's moving slower than all the other pairs.
Yeah, if I see USD CAD and AU moving and EU is just not doing what I want it to do, I'm not interested in sitting through all of this. So that's just, personal preference or experience. Yeah, AU was the way better trade.
It's flying, isn't it?
Yeah, it is, and it was really clean. If you look at the 5 minute, it gave the tap on the order block.
And also the 815.
Also on the reclaimed order block, it was really clean. Yeah, go AU 5-minute chart, bro, and look at. Oh, this is 5 minutes. Oh yeah, you're really zoomed out. That's why. But yeah, there's the reclaimed order block. It tapped. Also the other order block that took the lows. Yeah.
This
so
one.
It took. Yeah. Look at it going above the high, confirming market structure break, tapping it, and then just moving away aggressively, instead of EU just doing nothing really. But yeah, as you can see, we also miss trades and we don't care because, again, it's just part of the game. Part of being a trader. Yeah, this was a quick 1 to 3, taking London high. Quick 1 to 3.5 on AU. But yeah, this is the process of how we find trade and how we take them. And then because we are two people, if we are not like doing a live call or live Zoom, we are normally sitting in a live call together and everyone's watching a different pair and we filter out the best pairs to trade and give signals on that. And again, we are not signaling every pair we see. Like we've seen gold yesterday. We've seen gold on Thursday, I think. But yeah, this will be the full service of premium. Right now, we are just giving out free signals for you to understand what we are looking at, how we see the markets, and yeah, just for you to know if you're feeling confident with us, if you feel like you're in the right community. And then
the most important thing for us, for me and Mika, is giving value to the community, because I think we as traders, we all know how how hard this path can be, especially if you don't have the right guidance or if you don't have the the right people that can show you how to trade and all those things, because there's a bunch of courses out there, and I have bought myself a couple courses, and in the end you don't learn anything from it, because those courses are only designed for the people that's selling it to make money. And we feel like everybody should be able to the right way to trade and all these things. And for us, giving value to people and hearing success stories of how people became funded and how they're profitable because we help them out, that's really fulfilling to us. So that's the goal that we have in the end.
Yeah, just changing people's lives is what makes this really worth it, because at the end of the day, money comes and goes. Like it's nice to have money, but honestly, I don't need to be rich. Like I've started trading to have freedom to like do whatever I want. I can do that already. Sure, 2 more Bugattis in the garage would be nice, but it's not necessary. It's the freedom, it's the time you can spend with family and friends for me. And yeah, then the part of being money is a side, and once this is a side, it's just helping people, and this is what fulfills at the end of the day.
Correct.
Yeah, like for example, Don Niemand, who asked the question at the beginning, is one of my 1-on-1 students, or I helped him in a couple of 1-on-1 sessions, and seeing him succeed in his first funded challenges, especially coming from Iran, where there is like, not the best political situation, was really, really like heartwarming for me. And that's what I love about helping people. And as you can see, EU is just taking the stop because, it's just not moving. AU hit the target, USD CAT hit the targets, and then USD was just a slow pair that is not moving.
This is also why we decided not to trade it.
Yeah. There's a lot of things that you have to consider because EU look good, but if you're looking at AU USD CAD like intermarket, you could see that this is not moving, and then if it's not moving, we just stay away because why would we stay in all of this? And this is when it gets frustrating. Imagine being in EU and seeing every pair move to perfection, and then EU just takes a stop without offering your free RR or whatever you're looking at.
Guys, sorry. Don't you think that DXY is bullish right now?
Right, let me.
Like we can actually sell GU or EU maybe.
Oh, let me just take off this down.
Yeah.
In a perfect world, I want to see this go a little bit lower on the 1 hour and then buy it, but I know what you mean, yeah. But in a perfect world, I'm looking at the balanced price range at 102, 100, about that price level on the 1 hour. As you can go DXY 1 hour so that I can show them what I mean. So yeah, if you zoom in a little bit, yeah, there's a balanced price range at 102 around. Yeah, this as well, but then the lower one in discount. I wanna have it trade down there first before going up if this is a bullish move.
Oh yeah, I get it now.
Because
Yeah,
these lows, they were made like if you take this range from this low to this high, these lows were made in premium.
Yeah, that's why they are just creating liquidity, engineering liquidity in here. That's what I see, and then we go lower, taking that into the balanced price range, and then trading higher. Also, as you can see, if you have the indicator on for New York for London session, you can see that we are in premium of London. So sell off from here would be good as well, or nice.
Do you have the indicator, Mika? I don't have it.
I have the indicator. Wait, I can send it to you real quick on Telegram so you can put it on.
All right. Or you can share your screen too.
Yeah, I can share my screen too, but this is the indicator if you want it.
Okay.
And also then we are now at the PD array that we looked for initially on EU. Not saying that I want to trade this now, but yeah, this is just observing the markets. Yeah, now you have the indicator. So yeah, this is what I see. But again, what I wanted to see already happened. We just couldn't get it on EU, unfortunately. So right now I'm staying sidelines.
Yeah, me too.
I'm just observing EU a little bit on the side. If this gives a strong reaction or something around in this area, because this is essentially where I wanted it to be, then I'm interested. But again, this is not high probability, and chances are I will stay sidelines, because if you look at USD CAD again, look how USD CAD is dropping, and
yeah,
EU is just not moving up really. Like it's
USD
really
CAD
slow.
already gave a 1 to 5, and it hasn't finished going down. So this is the type of trade that you want to be in. You see these fast reactions, how price tapped the FEG and just started dying, and like this was in what you got a 1 to 5 in less than 15 minutes compared to something like this. Even
yes,
AU was
USD CAD was a clean one. So yeah, do you have any more questions? We can still answer a lot of questions. But our prime time of trading is, yeah, I'd say more or less over. Even though EU, I think if I had like gun to my head, I think EU is moving up from where we're at right now. USD CAD is continuing lower, and our USD is going. I don't know. What have you said? The AU target is. Yeah, first target for me would be the fair value gap on the 1 hour, and then we'll see what it does there. But yeah, as you can see. Oh yeah, also EU reacting nicely now. But it's just compared to USD CAD, it's just too slow for me.
But you can see it came down to the daily open. This is the daily open right here, daily open price, and you can see it touched it to the pip and went up. Started going up.
Remember, at or below opening price is where you want to buy, and at or above is where you want to sell.
But yeah, I think this is all for today. We analyzed all pairs. You can see USD CAD is just dying. Targets are probably going to be this FEG because this is going to act like a magnet. So this would be one of my take profits right there if I had a trade on. Because all of this in the end is just liquidity. Liquidity being taken. But yeah, everything as we outlined. And I think that's it for today, right?
Yeah,
Mika?
if there's no questions, I would say that's it.
If anybody has any questions, don't be afraid to ask. We're here to help.
I will share my screen real quick again.
I have another quick question.
Yeah.
Yeah, Rick?
I want to know, is the indicator available or no?
Yeah, the indicator is from our good friend. Kish, I don't know. I think most of you know Kish, or many of you will know Kish. I think we can share it, AJ, right? We'll ask him, but if he allows it, we will share it, yeah.
Yeah, of course.
And
all right,
yeah,
appreciate your time, man. I learned a lot. I appreciate it.
I appreciate your time. I appreciate you for being in the community. For us, it's giving back, and having people that we can give back to is what matters.
We appreciate each and every one of you for being here and being part of the Golden Circle. It means a lot to us that we're able to give value and that people are learning. And yeah, we hope to do this, for a good and a long time.
Yeah, correct. I think that's it for today.
Yes, guys. Yeah. Thanks a lot.
Also, if you look at the XY on demand, 50% of the order block just hit in London Premium, mean threshold hit. So yeah, if this is going down, you will continue going up. And I think that's the plan, because these lows are in premium of the range. So yeah.
Yeah, but you can see,
actually, DXY looked like somehow bullish, GU and EU were kind of, you know, sidelines. It had a great buy on GU, but USD CAD had a clear sell. So I thought that maybe, you know, maybe USD CAD, because, you know, USD, if it's bearish, then then DXY should be bearish as well. But now I have seen that USD CAD dropped easily, but DXY just was consolidating and even made a higher high. So yeah, I was a
probably
little
because
confused.
Canadian dollar is really weak. That might be the case. I haven't looked at other pairs with Canadian dollar, but this is something you can do. Is you can just look at other pairs with Canadian dollar in it and look if they are really weak. And then if you, I don't know if you guys know how the DXY is weighted against other currencies, but DXY is, I think, more than 50% weighted against euro. So this moves a lot in line with euro USD, and there's just a small portion of Canadian dollar in this indice. So this is probably why it's just not moving.
Yeah.
Again, EU is not moving as well. Yeah. Well, maybe I can find it. I will share in the group if I find the DXY weighing against the thing against other pairs.
That would
oh
be
yeah,
awesome.
there it is. There it is. Yeah, it's weighted 57.6% against the euro and only 9.1% against the Canadian dollar.
You can share that in the group, Mika.
Yeah, I will share in the group. I will share a screenshot.
All right.
Okay, yeah. So if there's no question, have a good one, and thanks for being a part of the group.
Good luck and good trading,
Yeah,
guys. Thank you for
guys.
being a part of the Golden Circle.
Great,
we appreciate it.
Beautiful.
All right. Have a good one. Bye-bye.
Yeah, you too. Bye.